Well, good morning. Sorry about the extremely late start. Pretty much anything that could have gone wrong this morning went wrong. But that's all right. Show kind of goes on. Good morning, guys. Happy New Year. Hope you're all doing well. Thanks again for hanging in. We'll try to get you up and going here quickly. So kind of move stuff around here a little bit, shifting around. So that's fine. I'll explain that later. But we're gonna be light today. Looks like our dear friend Bennett had a computer crash, so there's a sad black box above me. But we've got Terry and Alex. Alex, sit up, buddy. A little higher. There you go. You got a big job this morning. There's a lot of macro stuff going on here this morning. I need to rely on you. I've been kind of mailing it in for the first time in, I don't know, since I've started my business, guys. I've been taking some time away, relying on the wonderful guys, my team at TradingAnalysis, to spend time with the family. We moved up here to Saratoga last year, and it's been just a mad dash to get settled in, but we just took some good time, holiday time, to really spend some time with the family. Done a lot of skiing with the boys, and they're really getting into it. So thank you for paying attention to us while we've been quiet. But the team of TradingAnalysis has been doing a great job. Terry, Alex, Happy New Year.
Happy New Year.
Happy New Year.
Yes, sir. Yes, sir. I think it's going to be a busy 2020. There's a lot in store. Obviously, we have a lot of geopolitical tensions shaking up the markets here. I don't think the technical structure of the market has changed all that much. A lot of expectations going into 2020. We have a pretty good high valuation going in here into the S&P, and we need to see some earnings really start to come in here as we kick off in July. As I'm talking here, guys, let's see here.
Yeah, keep close to that mic, Todd. It's
Is it
fading
still
away
quiet?
on you. Yeah, just keep close to.
I can turn this baby up a little bit. Test. Is that
there
better?
you go. Yeah.
Yeah, it's better.
Okay.
It's much better.
So January 14th kicks off earnings season, so we're about a week away here. So there's a lot of expectations. We need to see those earnings come in to justify what's going on here. I'm still long the market. I'm still very, very long. I've been focusing on technology and specifically XLK. We've seen some pretty good moves up. I think, despite what's going on in the valuation concerns, obviously what's going on in the Middle East is real. Terry, talk to us as an oil expert. Can you kind of just give us your, coming from being an engineer at Exxon in your first career, just give us your color. What do you think, and how does this pertain to the oil market, and just what do you think?
Well, certainly oil is still the biggest energy supply for the world, and we can't do without it. So any significant disruption in Middle East oil is going to have an effect on oil prices. But of late, there has been a very large standing supply of oil.
Okay.
And I think you're seeing some muted movements, although the price of oil jumped, with the event last night and with the event last week. It didn't move dramatically as it has maybe in the 10 years ago. The U.S. is now being the top producer of oil and natural gas in the world is a paradigm shift compared to what you might have thought about 10 years ago. So it will have implications if tensions escalate and military action continues. I was over in Saudi during the first Gulf War. I spent 3 years over there, so I kind of know what could happen and how all that can get tied up. So, but I think in the end, it's going to be up to I mean, this could be one of those global events. If it, that's in the worst case.
What is
this could be
global events?
Those global catastrophic events. If this escalates into a full-blown war, right? I mean, that could, but that could be could be a big thing.
Has
But
Russia
I'm
been
not
quiet?
saying that that's going to happen.
Has Russia
So
been quiet? I was expecting them to be a little bit more vocal as tensions escalate.
I haven't heard anything.
I haven't heard anything either. That's
I
interesting.
haven't heard anything.
Maybe they
But
thought
but I did listen to the CEO of Chevron, and I think it was Exxon guy too. They were talking about their production. The Chevron's got a big production up in Kurdistan, or their exploration stuff, and I think they pulled their U.S. expats out. But other than that, they said it's business as usual. They got people on the ground. Everybody's still working. So everybody's still working in the oil field.
Okay. Interesting. And I'm just throwing up the oil futures. Of course, the other problem 3 of about 7 that's happening right now with this webinar. Welcome to the new year. Is my futures quotes on MotiveWave are not working. My fault. Not MotiveWave's fault. My fault, probably. But you guys can see, I mean, yeah, we've got a bid here, but have we broken out in crude above 66? No, not really.
No.
We're a long ways away from resistance, which is 76, and at the current rate of decline, we have trendline resistance into those mid 70s. So, wartime, Trump is fully able to commence with war at this point because they took aggressive actions. And what is that, Amendment 2, or not Amendment 2, Section 2, Part 2, whatever it is, to commence. He doesn't need congressional approval at this point. Am I right?
Yeah, but I don't think that's going to happen. I don't think we're looking at a full-blown escalation of war. I think a lot of saber rattling. You hit me, I hit you, and we're going to bust heads for a little bit. But
okay.
I mean, who knows? I mean, so got to be prepared for everything. But am I hiding my money under my pillow right now? No. So
no, I agree. I'm still long, and I love in terms of volatility, I use that as buying opportunities. I think we're still in a really good position. Let me just pull this up and see comments, questions, and everything. Okay, you want to watch page? Okay, now I can see comments and questions. So wow, good crew, and again, thanks for a lot of people in here. So thanks for tuning in. To talk about the state of the show, Bennett just built a brand new, huge. He's a extremely good tech geek, and geek is cool now these days. Computer. He'll be taking over in the future the production of this Wednesday Elliottwave webinar. So expect some changes there in 2020, and we have a lot more sort of components and guests to come in the show. The way we're kicking off this show is not representative of where we'll be in 2020. So with that being said, let's take a look at the Elliottwave position of the market. Yeah, that's interesting. Escalation may affect Trump's reelection. Generally, it's unlikely, and tell me if I'm wrong, it's unlikely for a sitting president to be replaced if we are in the midst of a conflict. So is it a political maneuver? I don't know. Did it need to happen? I don't know. I'll let you make that decision for yourself. All right. So where are we from a technical point of view, guys? We are still of the opinion that we just broke from a triple, complex triple. We've been of this opinion from actually mid-August. I think we announced it to you in early September because of Apple. And we've been talking about this a lot, that the Apple, and let me just actually start there, going to the NASDAQ, and then we'll back into the S&P. The Apple count was very perplexing. And I think a lot of what's happening in this market can be explained by Apple. And it certainly makes sense, being it's the biggest stock out there. So, forever we looked at this Apple count. We said, what is going on with this? And finally, I actually went back and found the video where I was going through it. It was with a member video, and I said, I was just like, this whole thing can't be a big triangle in Apple. It's obviously a consolidation. It's very hard to label, and then it just kind of dawned on me. It's one of the most daunting, complex corrections in the Elliottwave land, which is a triangle in the final wave of the correction. So there's the first wave in W, there's the second wave, and then higher lows, lower highs into Y, and then we've begun to move higher. So that Apple correction finished in August, and then we've begun to push higher. It then spilled over to the NASDAQ in terms of perhaps us realizing that that was the preferred count. Here it is. This one terminated a little later, which is interesting, in October. So Apple completed it in a full month prior to the NASDAQ doing this. And here we are.
It was kind of like an early warning signal.
It's just a leading indicator.
Yeah.
Just a leading indicator. And I don't know if we can say we figured it out, but we definitely got the count early in Apple, and I think we started to realize, I'm long Apple. I continue to hold a pretty good size position in Apple, and it's just been leading the market. So did we know, Terry? Is it fair to say we called it? I don't know. Maybe.
We were on top of it as soon as that happened, because we were struggling trying to identify what was this next movement here. It's and you came up with this alternate, and then as soon as I think once that NASDAQ pattern matched it, then I think we were good to go. We knew we were confirmed in it. But yeah, we had that Apple triangle in there as a proxy.
Lisa M says very unlikely. Okay, maybe that could be true too. All right.
I think there are those members that also still believe that wave 4 completed at that low.
Well,
and not into the triangle. And I think it's still possible. Maybe you have an alternate count on Apple that says wave 4 happened earlier, then we got a 1-2, but it starts to make. I think we had problems with that
based on this count right here,
the breakdown. Yeah.
Terry,
because then we had problems with the breakdown. Yeah,
I've been in this business now for 20 years, and each year that I've been in this longer, I realize how much less I know today than I knew last year or 5 years ago. Anything is possible. I mean, aren't you just so tired of people telling you what's going to happen? Even if I posted a positive chart on Tesla 2 years ago, I mean, the trolls would come out on Twitter in droves. I mean, and now the shorts, I mean, just imminent bankruptcy. I mean, just so much just vitriol for this company. And I mean, it's probably one of the strongest charts out there. So just when you're so sure something is going to happen, usually the opposite happens, and it happens in a drastic way. So the point I'm making is, could we be in a wave 3 rally? Could we about to be 4,000 S&P in the next, I'm looking at that May of 2021, in the next 18 months? Sure. I mean, so what is that? 10% would be 320 points, 640 points on top of that would more or less put you at 4,000, just shy of 4,000. Could we do another 20% year in the market? Sure. Possibly. So anything's possible. I continue to be long. I think any volatility that we see, barring WW3, I think is a pretty significant buying opportunity. So let's get down to the S&P off of the weekly. And stop me, Terry, if there's anything in there you want to add, or Alex.
Yeah, you're good. Or Alex. Of course, we'll get around to Alex. Alex will, he's going to talk about, probably the Forex and global macro stuff. We've been following the dollar yen, and the dollar yen and the S&P have a lot in common.
Yeah,
and
that's
so
something
tracking
we've been really trying to just keep your attention focused on the FX markets, because it's been quietest that I've ever seen in my career. Same with Alex. I mean, this is some say these are the tightest realized volatility ranges in FX in 40 years. And when you have so much going on the international front, when FX finally makes the move, it will have serious implications in what's going on in equities, commodities, and probably fixed income. So let me just finish up the S&P here. Obviously, you can see that this is our. Now let's work this count right here. No, Terry, help me. There we go. Yellow count is our primary. Is that right? Or am I not synced correctly?
I think we still have the red count as a primary.
Oh, we do? Okay, well, if you guys,
Did you not? I changed. You and I talked about it
Yeah.
when the recent change, and I had it on the black count, but it
Okay.
was
All right. Black
I
Ops.
think you said you made your red count the primary.
All right, that's fine. So here's the risk. This is the teams, and I am completely fine with my team, Alex, Terry, and Bennett, having a differing opinion. And I know Alex has a different opinion than me, and I think that's absolutely great. This is a very valid count as well. There's not just one possible count. There's not just one way the future will unfold. I mean, you have to be open to multiple possibilities. Be positioned in your account in a way that reflects what you think is slightly more likely to happen, but be completely fine with saying I can't control the future and know with certainty what the future is. So these guys are still hanging on to this count. And this is one that we originated back here in November and December of 2018, at a time when people were saying, oh, here comes a crash. We are going to get smoked. We identified support moving up. This has been a triangle in most of 2019. And then towards the end of 19 into 20, we're getting a B-wave rally. You can see very clearly the guys are tracking resistance in a 3,300 here. Just real simple. That yields a pretty significant drop down in C-wave. Is this going to happen? Maybe. I don't know. I'm not going to be surprised at all, and I will adjust my portfolio accordingly if the guys are right. The pullback should at least bring you to 3,100 and potentially this old zone of resistance from 2019 as a retest. The good part is, based on what I think is going to happen, and again, another valid count. Notice this is still 2019 is still a triangle. It's just its higher labels or wrapper is different. The good news is despite the different count, we're still seeing a pullback towards 3,000. Okay, this one is a little bit more shallow compared to the primary count, but both have implications for 200 to 300 points lower in the S&P. So in both cases, the first quarter of Q1 could be weak, and I am completely prepared to hedge with downside SPX trades. I am not going to let go of my longer-term position because I do think this is the longer-term path. I am going to hedge aggressively with SPX options, but I'm going to hold my positions because I've got pretty good gains, and I'd really like to stretch these out into long-term capital gains rather than short-term. So I'll show you my portfolio in just a second here, but here's 195-minute chart. Let's get down a little tighter.
The one thing I'll just say while you're sitting here, Todd, is we have not seen a dramatic correction movement. The correction that we saw here in this last week or so of the year and the first week of the new year, it's just all been sideways action, and it's not indicated its hand yet as it wants to be an impulsive push to the downside. So that's why we're hanging in there, right? So
exactly. So just to go even further, and again, I'm just riding the count. This actually does need to be adjusted. And I thought I made this. Oh, this is not the yellow count. So we have a triangle that is occurring, as Terry just said, over the last couple of weeks. And in kind of weakness, believe it or not, should give us E-wave completion. And any support should be found around 3220 area. And if I just do a quick fib multiple, E versus D puts you at 3226 downside support. Should 3214 break, the count is invalid. And I will be very concerned and begin to kind of go forward on hedging with the SPX options. Should we hold this zone of support right here, as low as 3214, which is interesting. If you take, what are we doing here? E versus D.
you're still valid all the way down to the C wave low.
Yeah, sorry, I need E versus C. Okay. You're valid all the way down here, 3214. And in fact, I'll put a marker on there. 3214 is where you need to reassess. The alternate fib projections in a triangle come in at 3230 and 3220. Boy, that's easy to use. Hey, Terry, you know what this is? Terry and Alex and Bennett, if you can if Bennett can hear us somewhere, hi buddy, we miss you. Hope your computer's okay.
He's working with Tristan in the background, I think, trying to get it back up and running.
Okay. Remember we did 2 of these. Maybe this is our 3rd one. Our must hold, should hold level. Should hold,
should hold. Yep.
So we should hold 32.30, 32.20. Must hold 32.14. So any weakness here, I think, is a buying opportunity to take us up in 5 of 5 of 1, and then at that point, as I mentioned, that's when we might see a wave 2. That minimum target is usually the area of the prior 4th down to 30.60. So you have 100 and from up here. That's a 200-point drop. So is it likely to happen? I don't think so. But we can make up an expected occurrence, probability of expected occurrence, with the way we structure the trade in terms of risk reward with the option. The way this market is trading, I mean, you can throw anything at this market and it just keeps going up. I give this thing maybe a 10-15% chance of occurrence, but I also think we could structure an option trade such that you're risking 1 to make 5 or 8. And okay, that's a great reward to risk ratio, but what's the probability that you're going to cash on that? I don't know, 10, 15, 20%. So I think that's just the way you got to look at it. And I just think we could be wrong in our analysis. So the market could be about to continue to push higher. All right, so let me just check comments and questions here, guys. We don't use
to bring Alex on.
Yeah, just a sec.
We're running out of time, so.
All right. Time size give clues to when 2 people. George is a good point there. When 2 people in a business always agree, one of them is unnecessary. That's great. That's great.
Good point.
That's a great point. Lisa, my comment was referencing the sitting president in wartime. Your counts are spot on. Okay, I got you. That's cool. As I said, I have, as long as somebody has a sound reasoning and is thought about the case that differs from mine, I not only don't be I'm not threatened by it, man. I welcome it. I love it. So, all right, let me just show you again on the stock side. As I told you, I had some more money that I did bring in because I am bullish on this market longer term for that wave 3. This is my cash account, and I'm going to be doing more with this in the new year in terms of portfolio management. I've got a high concentration right now in SPY, XLK, and Qs. Okay, so this is my actual live account. Have some pretty good unrealized profits at this point. And then across all, I'll show you the accounts as well. So those are the biggest holdings. AMD, in terms of percentages, has been unbelievable. Long AMD from an average of 21 as we're trading 48. So I think in terms of percent gain, that's my biggest. I wish I had more money in there. Amazon, Lulu, Microsoft, and I'm sorting right now by NetLick. So these are the holdings that I have in the portfolio. There is some adjustments that need to be made in here, and I will do so with members. But then again, all the just being completely transparent. Here are my positions, guys. This is what I'm holding in my accounts. I did put the Peloton trade on. So far, it's not working, but I put a camera down and when Trish was on the Peloton, because I was a Peloton guy that got her one for Christmas last year. So I did an interview that went on CNBC talking about whether she was going to divorce me for buying her an exercise equipment for Christmas, and she said no.
That was so cool.
Thanks, man. I couldn't believe Trish.
Trish is so cool. I love that.
Yeah, she's good. I definitely got lucky. All right, Alex. So can you tell us what's going on? I mean, Alex, there is so much happening on the macro front. The FX market's obviously responding. We're seeing a big move up in gold, which should usually correlate with the yen. Maybe talk about bonds. Just get us hooked up here because this is what's driving the market right now.
Yeah, I mean, we haven't seen nothing exuberant up to now, but definitely I'm thinking something is cooking. So I think that by the how the market behaves on the FX, It's like everybody is ready and waiting for a trigger, and it feels like definitely. As I said many times, I wasn't so confident of this rise in euro dollar, and I'm still not. So this structure here is not much promising on the upside. I have a bullish wave count, but I think this one is slowly starting to kick in, that we are going to see 107, 106, which was our trading analysis almost over 1 year target. And from there, possibly I'm seeing a pullback to this 118, 120 levels on the larger time frame. So a little bit of dollar strength here on a current events. I will show you dollar index as well. So this is the daily chart.
Is that like because it used to be the Swiss franc was the flight to safety, and when there's geopolitical tensions?
Yeah, it still is. We didn't see any exuberant move to Swissy.
Okay.
But we saw a push, nothing decisive. So on dollar index, as you know, we are tracking is correct from the upside. It's quite common that the ending diagonal is maybe not finished. It's going to maybe push one more move on the upside. So I'm not still locking in. I didn't see a crucial break here of the corrective channel.
Yep.
We are seeing some bounce here. I want to see a move up to confirm a further dollar strength here. So I'm waiting to see what is going to happen here. So dollar yen, I think that the most weakness we saw, it's actually on Aussie yen. So Aussie yen is already falling from its long-term channel, which I will show you now, and it is in a 5-way move. So wow, this is the daily chart. Yeah. So I have this wave count for a long time now, as you know. So I'm expecting a break of this 70 level. So clearly we have a beginning of something which is suggesting a possible risk-off move here in a wave 3, 4, and 5. 5 waves down, a pullback. Possibly we will entertain some shorts here, independent of the S&P. And definitely we are seeing the nice W triangle XY came to the 0.618, matching exactly at another 0.618 here, a channel resistance. So all of the technicals are kind of on agreeing here, previous wave 4 here. So I'm tracking this closely to position our members on the short side.
Wait,
don't
get off that. I you can't overstate that enough. I think go back to Aussie yen. Alex, I was going back and forth with Alex on this. This Aussie yen is holding the 70 level over the last half a decade. And just so you guys know, I want you guys to realize how important, as equity investors and traders, how important it is to be cognizant of the FX markets, because Aussie is the biggest, most liquid commodity proxy currency. Obviously, our hearts go out to everything that's happening in Australia. The pictures are just absolutely terrifying, and oh my god,
yeah, terrifying.
But the Australian dollar is the proxy for commodity demand out of Asia, and obviously there's there's a lot of volatility that we've seen over the last couple of years from Asian and emerging market weakness. So Australia on that side is the risk on indicator, and yen on the other side is usually the safety currency, where global wealth managers run into the safety and liquidity of the yen, bid up the yen just to hide out, just for safety. So on one hand, you have the Australian currency, which is a proxy of a risk on and commodity demand, and yen is the deflationary liquidity hideout. So those two are very, very, very important. We held the 70 level 4 or 5 times. We bounced, and as Alex is describing, we bounced, but there's a triangle in the middle of that bounce, which indicates it's very much corrective, which probably means we'll reattack that 70 level in Aussie yen, and that is clearly a risk off. Everyone is afraid. Equity markets should be falling if Alex is right there. That's a really important point.
Yeah, I have worked a little bit over some of the yen pairs, and also I have discovered this CAD yen as well, which is I like to do sometimes larger time frames as to know where I am. So this also, according to this wave count, which is relatively very complex, a simple technical head and shoulder here, a very big divergence on RSI on weekly, and 5 waves down in A, possible end of this triangle in B, and a relatively big move down in C. So I'm just looking to correlate the other yen pairs with the wave counts. So this one, for me, it also looks very bearish. It is a middle triangle clearly here in 3 waves. So I'm also observing this one. We might get from this E wave 0.618 retracement in a possible blue wave B, a 5-wave push lower retracement, and then a break as well in this Aussie yen. So to pair that up with the dollar yen, we are tracking the same wave count. So on a larger time frame, 5 waves up in A triangle B, and we are expecting, as well as the other yen pairs, a 5-wave move down in C to this 98, 97, 96 area. So many of these yen pairs look alike. So I'm very, very on alert with this. Every global insecurity will bring yen much stronger within a second, especially overnight if something happens that when we sleep. So I'm looking very carefully what's going on, and I'm ready to put a long yen trade as long as I see some pullbacks here. But for now, everything is
shorting
going.
the dollar yen.
Short, yeah. Long yen, short dollar.
Yen.
Yeah, which is long yen. So definitely, as you can see, all of this what I have shown you, CAD yen, Aussie yen, and dollar yen, it smells like trouble. So for now, I'm on my toes and waiting the breakups to put a trade for our members.
Very nice.
Also, cryptos, if you like to see them.
Sure, go ahead.
Cryptos is moving up. We are still not out of the woods, so this can be a B wave correction still. We have a bullish and bearish counts. We have made an extensive coverage on our webinars regarding cryptos last 2 weeks. We even worked for the new year with our members. So this is actually a W triple correction here, still possibly not over, but for any case, we have a very nice bullish wave count, which we track, and a pullback on this wave 2 will be our longer term entries on a Bitcoin for further upside. So we are still on our toes, but very nice developments here. Possibly if we break this channel according to this wave count, to do a pullback, play some longs here to this previous 6 wave, which acts always as a resistance. And then if that happens, we're going to see a small pullback possibly for our long-term entries. So nice developments. Actually, cryptos showed some safe haven qualities with the latest developments. So let's see if they're gonna if this is going to be sustainable. Because I need a few other moves on the upside as a confirmation of the break of this. But our time ratio worked. We have been up around 5 to a 7, not exactly at the lows, but from here. So for now, we are still on track very nicely with these cryptos.
Very nice, very nice. So at what point, Alex, again, will you confirm that this is in fact the right count? At what price would you secure wave 2? The green wave 2.
I will secure a wave. Yeah, I will secure a green wave 2 if I see a clear 5-wave move above this corrective channel, and which is potentially now developing. Okay, so this is a green wave 2 over. We have been moving up in 1 complex wave 2, and we are working blue wave 3 now. Pullback in a wave 4, which I'm expecting to catch on the long side for this 5th wave, and I expect orange wave 1 to finish around 10,000, 11,000, and then I'm gonna wait for a possible pullback, very short one, to get on the long side on Bitcoin. So this is the plan for now. Also, we have this wave count, which is a bearish one, so still possible, because up to now we see 3 waves up, matching in 100% equality here. So still on the fence here. We are not making our move until we have a certain clarity of what is going to occur here. So it's possible that Bitcoin just drops to new lows from here as well. So,
Gotcha. Very good.
I'm very confident in these two wave counts.
Yep.
It's very easily to confirm. We need a little bit more upside, and actually the bullish wave count will be confirmed, and we are going to get long on the Bitcoin. Yeah, from the macro perspective, as you said, I think that many of the people are wait and see. I didn't see much of the selling anywhere, but I think that many of the investors and funds are very ready and prepared to liquidate and go in a risk off mode if it is necessary. And I think TLT is in the fourth wave, so I'm expecting bonds to go up in a fifth one.
Yep.
So also we have a TLT here. We can show you on the bonds count. So I think that, and also Todd, interesting, FXY is showing some movement from our levels, which is actually the ETF of the Japanese yen. I had a discussion with Terry because Terry told me you like a little bit more to look the original one than the ETF. But I think in this case, maybe even this ETF has a little bit more cleaner wave count. So
then
we had a nice push up. Yeah.
Oh, wow. Okay.
Yeah, so we had a nice push up in 5 waves from our levels. As you can see, wave 1, WX, and very nice second wave here, 786 hold, corrective structure. We are out of the corrective channel. I think this is a green wave 1 in development. So if we subdivide this, we are going to see a 1-2 up in 3, 4, and 5. This will be a confirmation of a further breakout. And the wave 2 is a way to go on the upside. So look this very carefully, guys, because this will signify a probable very big risk-off move on the upside on FXY.
I hear you loud and clear. I hope you're not right, Alex. But I hear you loud and clear. No,
I'm here to.
I mean that with love. You know that.
I'm here to play devil's advocate. Somebody has to be.
That's what I want.
Somebody has to be bearish. Okay, so TLT.
There's plenty of bearish people out there. Don't worry.
No. I mean technically and globally. I'm not bearish. I'm a conservative guy, so I'm not blindly bearish.
Skeptical. More skeptical.
Skeptical. Yeah.
Well,
I'm not a skeptical guy.
Always have to be skeptical for sure.
Yeah. No, I mean there is a lot of bearishness, but people are bearish based on a false premise.
Yes.
And Fed is the liquidity, this and that. It is what it is, guys. You have to look objectively, technically, and what's going on. And if markets it goes up. So you can be bearish as much as you like. So it's just like that. So TLT, we have a nice 3 waves up here. Wave 1, 2, very nice subdivision in 5 waves in wave 3. Pullback in a wave 4. So possibly to pair this with FXY, we are seeing 5 waves up on a smaller time frame. Maybe we're going to go above this channel, make a wave 2, and then further consolidate and move, which is also signifies the potential move in bonds as a safe haven. Gold is moving up, so we can look at the GLD or we can look to some gold futures. We have the several wave counts which are actually showing that the gold is about to stop around 1,600 or 1,700. But for now, we are still moving on the upside on a global risk. So there is some wave counts which I will show you maybe if this develops further. But I have did some of the also bullish wave counts there. So this also can be counted in a few ways correctively. So just for a case, I will show you both wave counts
go back to that chart,
here.
Alex. Go back to, is that a weekly? What's 100% 381?
It's here.
140.
We are there.
We're there. Okay, got it.
Mm-hmm.
And that's
already
a trade I
passed
like
it
to
a bit.
do, guys, is are we in a wave 3? If you break above the 100% percent distance traveled of that blue parentheses 1, compared to ongoing 3. If you go test it and you don't sell off from it, that sort of eliminates that it's an ABC correction, and it implies that you might have a move up to that green $171 price target. So a trade I like to do in that situation is, and I might like to put it on as a hedge, you buy the option, you buy the strike that's at that 100%, you sell the one that's at the 1618. So you could do like a 145 or even like a $150 call strike in GLD and sell the 170. And you might need to go out 6 months on that, but it's a $20 call spread, probably costs you $6 or $7, right? So you're risking 14, or you potentially make 14 to risk 6. So that's a nice way to kind of trade that.
Yeah, so be aware that gold also might break out as well. So we have been bearish, looking for an ABC pullback, but we have to have alternative, because we are seeing the gold is kind of a telling, because it's far more advanced on the upside than dollar yen on the downside, and these two are quite good correlated. So something will catch up. I think in this terms, dollar yen will catch up on the downside. So that's my opinion.
Okay.
Just to get you clear. Yeah.
Very good
stuff.
Let's begin to wrap it up here. We've kept them long enough. If that's okay. Is there anything else you want to slide in there, Alex?
Yeah. Sorry.
Is there anything else? Is there anything else that you want to?
No, I think we can wrap it up. We can talk a little bit about weeks, but I think it's too early. So I'm gonna prepare that for the next time, maybe to spice a bit. So for now, that's it.
All right. Good work. Good job. And I think we'd be remiss in not mentioning the massive travel range that we saw in the futures last night. Of course. Watching on news that Iran sent 15 missiles into Iraq, sent the futures down 50 handles, but then right about 8 o'clock, 9 o'clock on the East Coast, we've come all the way back, and now we're triple topping up around 32.46, which was the Globex high. We're at 32.43 right now, so they're showing a lot of strength. To Terry's point, the concerns of this escalating seem to be not justified, and if we can get through this triple topping up around 32.55 in the front month S&P futures contract, it looks like we're going to have a strong risk on day. So just looking at the sectors and just kind of running down what's happening here in the first 10-15 minutes of trade. I always love to sort by sectors, and it looks like financials, communications, transports, and discretion are leading it. That's interesting. Financials leading, and I'm assuming bonds are up. Bonds are up a little bit. So financials are coming out of the gate fairly strong. Lagging the S&P so far in the early goings are healthcare, staples, industrials, materials, utilities, real estate, and energy. So all in all, pretty strong day. Let me just take a gander here to what financials are doing well. Terry, have you looked at this?
It's the large cap banks are actually still in the leading quadrant in our RRG.
Really? We didn't have time for that.
They are losing momentum. The last time I looked at it, their momentum is starting to wane, but their relative strength is still ahead of the S&P. And I was seeing some increased movement in the insurance stocks in the financials in terms of momentum. Their momentum was rising rapidly, but their relative strength was still lagging. So we're definitely continuing to see the rotation occur.
Yeah, you're seeing that. Look at that. I mean, this is let's change it down. Life and health, property and casualty, life and health. Mm-hmm. You're seeing a lot of insurance, or as we say in the North Country, insurance. And South, the stress is on the first syllable, right? Insurance.
Insurance. Insurance.
I'm just being a smart ass.
Insurance.
We say insurance, or instead of insurance. I think insurance sounds better, to be honest with you. All right, so that's interesting. Financials leading the way. Behind that is communications, up 0.42%. Let's just take a look at who's moving there in the comms section. In the comms section, XLC, we've got Charter Communications, Take-Two. I think these video game stocks. Twitter coming up off the lows. I know my buddy Josh Brown bailed on it. Technically, I still have it. It's one of my biggest losers in my portfolio, but I'm holding on.
Yeah.
Google.
I think you got to get back in. You got to be thinking about getting back into Netflix too.
Oh, you know
Todd.
what, Terry? It's
we
all
can
right. I was going to bring that up. Trade Desk is another one I'm watching, breaking into new highs. Netflix is something we have to watch. I don't know what
I know that's we've had a struggle with Netflix over the years, but I think it's
I hate
coming back around again.
I hate trading the stock, but I can't stop myself. I don't think I've made money trading Netflix. I'll be honest with you. And my TD is deathly slow today.
Possibly a triangle here.
Possibly a triangle. Let me get down to the daily. There's a gap close that we're looking at here.
Yeah.
So potentially A, potentially B. We have a big old gap close into 362. It's the first upside fib projection would be 345. So, maybe we have room up to here. I think earnings are on January 24th, I believe, in Netflix. I wouldn't mind starting to push up into this zone up here on Netflix. And of course, if we can get the breakout, that'd be great. Salesforce is another trade that we do have a small position in the portfolio, got a nice push. I don't know what's going on. Anything that could go wrong today, Terry, is like nothing works today. Nothing. So we just completed a triangle there in Salesforce. I believe we're doing wave 1 and 2. Holy cow, what a move that was in Salesforce.
Yeah, this is going to be nice. This is just about to pop out of all-time highs, right?
Yeah.
So I don't.
We're through
you
it.
did, yeah.
We're through it.
I see it. I see it.
Yeah.
There it is. I think you should add to the position.
I think so. In fact, I will. I will add to Salesforce. So the $200 is the upside target. That's the wave 3 typical upside projection. All you're doing is you're taking the percent distance traveled here, multiplying it by your typical wave 3 measurement, and that gives you the target upside around 200. Salesforce looks good. I was shopping with my wife in Jersey in the malls, because that's what you do in Jersey is you go shopping in malls. At Lulu, listen, this is going to come out saying wrong, but every girl, woman, doesn't matter her age, they're all wearing these leggings. And I'm asking my nieces, who are all teenagers, like, is Lulu, like, what is this? Do you guys like Lulu? The answer is yes. I asked my 21-year-old nanny that helps us with the boys. Yes, the girls all that age love it. You ask the 30-year-olds, the 40-year-olds, my wife. I hope she didn't hear me call her 40. They all like it. So I was just like, all right. So I just literally bought some more shares of Lulu. I was standing there in the mall, and this thing just is breaking to new highs. The brand loyalty to this is just unbelievable. What is this right here? Is this potentially another 1-2? If it is, oh my gosh, is Lulu going to explode? So just watch that one. The brand loyalty with girls is unbelievable. With women is unbelievable in Lulu. Guys wear it too. Square is another one I'm watching. Terry, I'm going to put you on the spot. I put this into a triangle yesterday, and it came back. Somebody overwrote my file. I just got to figure out what's going on. Square's another one. I think we've just got to do this and make this a triangle. At some point, Terry, in 2020.
Yeah, I hadn't been following Square. I think Bennett follows this one.
Okay. I think.
But yeah, it kind of looks like a triangle to me too.
Yeah. Yeah. So watch Squarespace. This looks like you just got to go right now.
That looks like it's ready to
that's not
make a big move higher.
Yeah.
For sure.
Yeah. Square. That's.
Yeah. Yeah, for sure.
So I'm saving this. I'm going on record, Terry. I'm saving this, and if this gets overwritten, heads are gonna roll. No, I'm just kidding. Starbucks, Costco. All right, so that's that. Match is another one. I have a couple of friends who are money managers and fundamental guys, and they're making a strong fundamental case for Match.com. And I've been watching this one move up and start to develop technically fairly well. So keep an eye on that. They gave me this back here in the mid 70s, and now it's at 85. But Match.com is one that you can look to focus on. AMD's fine. Apple's still flirting with 300. I sold some calls. I sold a call against my 100 share position in Apple, which we're bumping right up against there in Apple. We're 298 in Apple. And again, sorry, this is painful. I don't know why my TD is so slow to serve up the quotes. So primary is right here. I think, like the overall market, we're sort of existing inside of this wave forward, which ultimately gives rise to a push into the 3.5, 3.10 area. And then at that point, resistance could be expected to come in. So we're still bullish, guys. We are still bullish. I don't think there's any reason to look otherwise, except for this fine gentleman right here. Alex certainly has some concerns on the FX side. It might take some time for those to come to fruition because vol in the FX market's been really, really quiet. But we have to keep in mind what Alex is saying. We need to be prepared. Proceed cautiously, skittishly, and optimistic.
Just keeping you with the balance, guys.
Hey,
I have to
man,
be on the other side.
That's what we need. That's what we need. The other thing I would say is the plant behind me is not dead. It's actually green. I have the chroma key on from when I was using a green screen, so it's stripping the green out of this plant.
Okay.
It looks like one of the ugliest plants.
It looks dead.
This is a terrible. It looks like it's in Australia. It looks like it's all burnt, unfortunately.
Oh.
No, this is actually a fake green plant, but the chroma key is stripping the green. Again,
All right.
So a lot of concerns in the world. Our hearts go out to the people in Australia. I hope everyone's safe. And I hate seeing those pictures of those poor animals. Oh my gosh!
Yeah, actually, did you get the morning news? They arrested 24 people for
I heard it was
deliberately.
I heard it was 200. I thought it was farmers. As far as I heard, it was farmers trying to pre-burn to protect their crops. In the event that a fire were to break out, if it was pre-burn, it wouldn't spread onto their territory. I don't know if there's more behind it.
Yeah, actually, the news I read from Australia this morning is that there was a plan for a new super train to go exactly at that route. So the police arrested this morning for questioning 24 people involved in that project. And they have apparently evidence they set fires on purpose.
Yeah, so it's clear. It certainly seems intentional. All right, well,
we'll see, but it's devastating.
And then our troops overseas, please stay safe. A lot of busy start to 2020. So markets seem to be withstanding, being pretty good, holding up. I can't really speak English yet this year, but it'll come around. So thanks, guys, for watching. Throw a thumbs up there. And if you appreciate the content, throw a comment in there. Somebody you'd like to see as a guest, let us know in the comments below, and we'll try to book them for you. Check us out at TradingAnalysis.com. We obviously have foreign exchange. We have crypto. We have stock options, and investing portfolios to help you guide through. So check us out at Trading Analysis. Bennett, you're dearly missed. He's fixing his computer. We'll catch him on the next webinar. And have a great rest of the week, guys.
All right.
And we'll see you soon.
See you guys.
See you guys.